Guys, welcome back to my YouTube channel. So in today's video we are going to start where we saw previously. We are going to learn about candlestick. I'm going to be teaching you guys everything you need to know about candlestick pattern, how to use them to get signal in order to enter or to close a trade the forex market. So make sure you like and subscribe and stick around to the end of this video because you are going to be learning something new. So first of all, what is candlestick? It is a created design in the chart that tells us exactly what is going on in the forex market. It actually helps to identify which have power in the currency pair you are actually trading, like Euro, USD. Candlestick pattern show what really happened in a specific time in the time frame you choose. You can use candlestick to identify when the market has momentum, to identify when the market has a high volatility or a low volatility. And with candlestick pattern, you can use it to identify when to enter a trade and when to close a trade. It tells you everything you need to know about the market. So whenever you open your chart, for example, you open your XAU USD chart, you will see like a lines in the chart that is called candlestick. So each having a different color. There has a bullish, which is a bullish candle that has a specific color. You can actually modify it in your own way, but the color used for identifying it is always green. And we also have a bearish candle, which is red, which shows when the market is actually falling. So these are the two types of candlestick you can actually see in your chart, the bearish and bullish. It is always has two colors, the bearish and bullish. The bullish is often known with green color, while the bearish is known with red color. You can actually modify it in the way you like in your chart. So how to identify the bullish candlestick? In candlestick, there are body and wicks. The body represents the actual move of the market. To identify a bullish candle, the market needs to open low and close higher than it opened. That will be identified as a bullish candle. But if the market opened higher and closed lower than it opened, that is called a bearish candle. Make sure to grab that because it is necessary in your trading if you want to be a good trader. So different types of candlestick, and I'm going to be listing the most important to you guys. As there are different types of candlestick pattern you guys should really pay close attention to, and they are very important. First in our list is Marabozu. Marabozu is a type of candlestick pattern that has no wick, a little but no wick. It can have a little but often has no wicks. This means that the market has momentum and still have a higher probability of going higher forward, or a bearish Marabozum and a bullish Marabozum. Take note of that. And guys, we have a morning star candlestick, which is always signaling a reversal in the forex market. Whenever you see a morning star candlestick, it always signals that a reversal is going to occur in the forex market. It's always seen at the bottom of your resistance or your trade line at your reversal zone. It always signals that the market is going to reverse from bearish to bullish. So the next one is evening star. Evening star is also a reversal candlestick opposite to the morning star. Evening star always signals that the market is always also going to reverse, but this time from bullish to bearish. So you often see the evening star at the top of a resistance or a trade line. And the next is engulfing candlestick, can also be a bullish or bearish candle. It's always seen at a resistance or at a support, signaling a reversal. This is when a candle engulfed the previous candle, meaning that there are much volatility coming into the market, which is pushing it higher or lower. It always signal a reversal. And we also have another candlestick which is called hammer. This is a candlestick that has a low body and a tall wick. The hammer candlestick always signal a reversal, and it is a candlestick with a little body and a tall wick. You can often see it as a resistance or a support, which shows that the market is about to reverse, either to bullish or to bearish. You guys know doji. Doji is also a type of a candlestick pattern that has a tall wick or a little wick, but often has a tiny body that really can't be seen. This often shows that the market is about to reverse. It's also a reversal candlestick pattern, showing that the sellers have lost control and the buyers are getting power, or the buyers have lost their power and the sellers take over. So you can often see this type of candlestick pattern at your trend line, support or resistance. A doji can also be a bullish candle or a bearish candle. Morning star is also a reversal candlestick pattern, which is signaling a reversal from bearish to bullish. First candlestick showing that there is a selling momentum. Second will be like a doji candlestick, a little candlestick, either have a wick or no wick. Then the third candle showing a strong push of the buyers coming into the market. That is also a reversal candlestick. While an evening star candlestick pattern is also a reversal candlestick, but opposite to the morning star. This shows that market is going to reverse from bullish to bearish. It is often a 3 candlestick formation. First, you have the first candlestick that shows momentum, and the second candlestick, which is in the middle, that has a little body, have a wick or no wick. Then the third candlestick showing the power or the momentum of sellers coming into the market. So guys, with the use of candlestick, you can use it to identify a proper reversal signal, when to get into the market, when to exit your trade. It's often used for identifying what the price want to do next, predicting the future movements. And the candlesticks are very important because it is the foundation of price. And we also have a candlestick pattern. We have a patterns in the market that you also need to grab and have knowledge about, because it is necessary as a forex trader. First in our list that I'm going to be explaining to you guys is the pattern head and shoulder. Many of you guys know the pattern of head and shoulder. This is a pattern that has 3 tops. The middle top is always taller than the 2 tops, like the formation of head and shoulder than in the human body, the head and the shoulder. So how to trade the head and shoulder is, after the neckline have already broken, you guys will see the neckline. I'll show you guys right here. You have to wait for a retest, or you can enter if you have your own confidence to enter the trade. You can actually enter, but it is advisable to wait for a retracement to pull back at the neckline before entering the trade and ride with the market. This is also a reversal pattern that you can use on your trade line or on your support and resistance zones. So guys, we have finally come to the end of this video. In the next video, I'm going to teach you guys how to identify a trending bearish market and a trending bullish market, how to trade them and how to create your signal. So make sure you like this video, subscribe so you won't miss the next video. I'm trying to teach you guys how to trade forex before the next 90 days, and I know it is possible. So make sure you follow my community by subscribing and always watch the video in order to improve. Peace out. See you in my next video, guys.